Markets are down, portfolios are red, and I know a lot of people are thinking, should I sell, hold, or even buy more? I mean, we're already in bear market territory for most major markets, which is a 20% drop from all-time highs. This isn't the first time that this has happened, and trust me, this won't be the last time as well. So in today's video, I'll be talking about what I'm doing this time around and some of the things that you guys can consider doing as well. Let's get to it. First, let's talk about what's happening real quick. Why is the market dumping? I'm sure a lot of you guys know, but there's a lot of uncertainty going around these days with all the tariffs being imposed by the US on basically every single country out there. And if there's one thing that all investors hate, it's uncertainty. No one really knows what's going to happen, right? Are the tariffs really going to be implemented? Are they going to roll it back? Are other countries going to retaliate? No one really has a clue right now. So there's a lot of recession fears globally. People think that the economy might get into a bad place, things might tank. And personally, I do think that it is a possibility. But I won't talk too much about this in today's video. Let me know down in the comments below if you guys want to know more about, a recession and how you guys can prepare for it yourself. By the way, if any of you guys want to start investing, then now is actually a pretty good time because stocks are a lot cheaper right now, and you'll need a broker, so you can check out Moomoo. They will allow you to invest in both Malaysian and US stocks. So if you guys want to sign up, you'll get some nice rewards for using my link, which I will leave in the description of this video. Now, before I get to what I'm going to do this time around, let me first talk about what I wouldn't do. So I've already been through this kind of twice. I've had two big market drawdowns in just 5 years of investing. First in 2020 and then the second one in 2022. So these things are still fresh in my mind. First things first, I wouldn't panic sell. Now, I only say this because I've done this myself before and it was very painful. I know ideally, right, all of us sold at all-time highs and now we're holding a lot of cash that we're ready to invest, but that is not the reality, at least for me. At this point, with a 20% plus drop, I don't think it's a very good idea to, start panicking and selling because it's already dropped by so much. But this is just for my own portfolio and for my own investing style. Not gonna lie, I have no idea if things are gonna fall further or if you're gonna have a V-shaped recovery. But if I had to choose, I think we still can go down a bit more. But again, I still wouldn't sell any of my investments because things can change really quickly and I want to stay invested. Like I said, I've done this before, I've been through it before. Stocks were dropping by 10, 20% and I felt like it was too painful. It was going to be the end of the world. This time it's different. It's not going to recover. So I sold my stocks just to see everything rebound straight after that. And if I really wanted to reduce my positions, that I would not cut my positions on a red day when things are going down. I would cut my positions when things are good, when there's a green day. So during bear markets, it doesn't just go down, 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 down. Intertwined in all of these like down days, there will be huge up days as well. So if you want to reduce your position, I will wait for green days. In fact, as of the time I'm recording this video, just yesterday, stocks were up 10-12%. Good time to sell, I guess. Next up, another thing that I would avoid is checking on my portfolio too often. So I used to do this a lot too. I used to just check it just for fun. But especially during bear markets, I used to just stare at my screen and look at my account value go down because I wanted to know how down bad I was. But this never helps. Trust me, if anything, this made me a bit more emotional with my investing and it made me panic, it made me feel fear, and it made me make bad decisions. Now, after a few years under my belt, after going through this a couple of times, I pretty much don't really check my account balance ever. The only reason I would log into my broker is if I want to place a trade, whether it's to sell and take some profits or to buy the dip. Otherwise, I'll just let it be. I mean, just looking at the chart, just looking at your phone screen of your account balance going down, it won't change anything, right? The market will do what it does. We just have to hang on for the ride. Finally, one thing that I learned very painful from the last time round is that I wouldn't try to catch a falling knife. Just because it dropped by 20% doesn't mean it can't drop more. It doesn't mean that it can't go to 30, 40, even 50% down because it has happened before. If you have some cash available to invest now, then I would say you're in a really good position because stocks are a lot cheaper than they were a month, 2 months ago. But I still wouldn't rush to deploy all of my cash just because, a lot of people have this thinking, it's already dropped by 20%, surely it's going to go back up, right? Well, wrong. And this is especially true for individual stocks. So I used to invest into individual stocks, which I found a bit too risky, which is why I now switched to all ETFs. But yeah, if you guys are looking at individual stocks, then be a bit careful. I have friends who told me this stock is already down 80%. Surely it's going to go back to all-time highs eventually, right? Well, sometimes they don't. Sometimes the ETFs go back all the way up, but some stocks, they still suffer and they still stay way down there. So be careful trying to catch a falling knife. So instead, this is what I'm going to do in this bear market. First, whenever I'm feeling a bit of panic, whenever I think, my account value is going down by too much, I just zoom out of my charts and remember that bear markets happen, stock prices drop, It's normal, and like I said, it's going to happen again. I just need to remember that at least historically, over the long run, stocks go up. 2020 felt bad. 2022, for me at least, was even worse. But at the end of the day, if you look back at the charts, we went back to all-time highs. We recovered, even though at the time it felt like it was never ending. It felt like every single day was just going to go down. But I want to give you guys a disclaimer, just because all these times in the past in history, stocks went back to all-time highs, doesn't mean that this time it will happen again. There's no guarantee when it comes to investing. But because the only sort of data point that we can look at and rely on right now is based on historical data, I'm just going to assume that yes, we are going to go back to all-time highs eventually. I don't know when, but I'm just going to assume that we are. Next up, I'll keep sticking to my investment plan. So right now I have, my strategy for investing, I guess, is a dollar cost averaging approach, which means I have automated investment setup to invest in stocks every single week. Now, I have a lot of friends who follow the same approach of DCA. So they have their weekly investments, monthly investments, whatever it is. But every time stocks drop, every time there's a bear market, they will always ask me, without fail, should I stop my investments? Should I stop now because things look bad? I'll just buy a bit lower, right? Well, I don't know. Personally, I will just continue with my investing plan. Like I said, I think most people get a bit more emotional when stocks drop. You should just try your best to stick to your plan as long as you still think it works. I mean, it kind of makes sense, right? Especially if you're taking a DCA approach. Now that stock prices are cheaper, it makes even more sense for you to invest. I personally would try to invest even more whenever stocks are down 20% like they are now. I also have a cash pile that I saved up that I didn't really want to invest over the last, I would say even 12 months, just because stock prices have been going up way too much and I thought valuations were too high. So yeah, I have a bit of cash that I plan to invest every time the stock market drops by 5%. So now that it's down 20%, I invest. When it's down 25%, I invest a bit more. And then hopefully, eventually, I get to deploy this entire amount. Again, this is just my investing plan. You need your own. The entire message I'm trying to tell you guys here is that you should stick to your investment plan even though we're in a bear market. Actually, because we're in a bear market, it's even more important for you guys to stick to your investing plans. One thing that I do want to call out though is that from 2020, when stocks dropped like 35% in 1 month, I had a very, very big regret, which is I basically tried to bargain a bit too much with stock prices. So I thought, it's 35% down now. I'm just going to wait for it to drop to 40%, wait for it to drop to 50%, and then I'll invest. I'm going to pick the bottom. I'm going to invest all of my cash at one go, and I'll be so rich when everything recovers. Well, obviously, I failed because back then the recovery was extremely quick, and then at the end of the day, I had to buy at higher prices, which meant that I gave up on a lot of profits. So yeah, it's difficult, right? On one hand, I tell you guys, don't go all in too quickly because it can fall further. On the other hand, I tell you guys, don't wait too long because you might just miss the entire thing. So yeah, it is difficult. Yes, at the end of the day, you just need to understand how much risk you're willing to take. You need to accept that you will not buy the bottom and just, like I said, stick to your plan. Now, let's talk about some other things that you might want to consider when we're in this scenario. So one thing is that I definitely want to keep some cash available to me, and I don't want to go all in with my investments despite how low the stock market is and how much of a bargain we think it is. One reason is, like I said, I don't know how far this stock market sell-off can go, and if things really go crazy, let's say something gets broken and we get a flash crash, things go minus 50%, minus 60%, I just want to make sure that I do have some cash ready to buy the dip. And another reason is that this stock market sell-off that we're seeing right now, it's not just a stock market thing. The economy can go into a recession. In fact, a lot of people are thinking that it will. And like I said, I do personally think that it will as well. So this is one extra reason why I wouldn't advise against, investing all of your money right now. You want to have some cash handy in case things go bad. Like let's say, touch wood, you lose your job. So I want to make sure that I'm in a position where I never have to touch my investments to, pay for my necessities. The worst case scenario for me is that the stock market is down 50%, but then all of a sudden I lost my job and I need to sell my investments, lock in that 50% loss just to withdraw it and pay for my day-to-day expenses. That would be painful. So as usual, you can only invest, or you should only invest the money that you won't need in the short term. To me, all the money that I put into my brokerage account and invest into stocks, I assume that I don't need this cash for the next 10 years. Another thing that you can do during this bear market is to revisit your investment plans. So a lot of people during bull markets, they think that, I can take on high amounts of risk. I can invest into the most risky assets out there and I'm going to make a lot of money. So this is very common in a bull market. And then a bear market comes and it's just going to humble you because you realize that you can't actually tank a 50-60% loss. It will be very heavy on you emotionally, thinking about how much money you've lost. I know this, I speak from experience because, like I said, I went through all of these things before. And this is pretty much why I swapped from investing into individual stocks into just purely ETFs, because from my last run in 2022, I realized that individual stocks were just not for me. They were a bit too risky and primarily they just took up too much time. Also, if you're a beginner and you've never invested before, then now is a really good time to do so, because bear market, right? All the stocks are down by like 20, 30, some of them even 50%. So they're cheaper than they were a month ago. So this is a really good time for you guys to invest, but as usual, all the other rules still apply. Another very important note for you guys who are just starting out investing: don't try to buy the bottoms and then sell the tops. Don't think that you're some godlike trader who has all of this stuff figured out, because trust me, you can get burned quite bad. I think a lot of people, they try to, oh, I'm going to buy when it's low, I'll just look at the candle charts a bit, and then when it's high, I'm going to sell. The worst thing that can happen is you buy, you go all in, and it goes lower and lower and lower, or it makes a bounce, you sell only for the stock market to keep going up, and then you miss out the rest of the move. The best thing that you can do, especially if you're a beginner and especially if you're thinking about investing for the long term, is to just buy and hold for the long run. So yeah, if you guys are new and you want to start investing, like I said, you will need a brokerage account. Check out Moomoo. They're both licensed and regulated in Malaysia, so it's a pretty good option. I'll leave the link to sign up in the description below. So from the last 2 rounds I went through this bear market, I guess, in stocks, I noticed that there are 2 possible outcomes. One is you panic and you make knee-jerk reactions, you get a bit too emotional. So for example, let's say today stocks are down 10%, you panic, you sell it all off. Tomorrow stocks are up 5%, you get FOMO, you buy everything just to see it drop the next day again. This happened to me before, literally, I tried to buy, sell, and at the end of the day, the stock market is back to all-time highs, but my portfolio is still in the red. The second scenario is you stick to your investing plan and you make smart decisions. So for me, that would be continuing with my DCAs. Every single week, I will invest no matter what, whether the stock is up 5% or down 10%, I'm still going to invest my money. So usually, like I said, based on historical data, based on what we see in the past, things will go back to all-time highs eventually, and if it does, then you'll be having some really nice profits. So at the end of the day, it's up to you. Which side are you going to be on? Anyway, thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.